Well, hello and welcome to this Moneycontrol live stream. We're watching Morning Trade with me, Nandita Khemka. Well, it's a brand new week, and where will the markets settle in when it comes to this week? We'll also be touching base with experts and getting your queries answered during the course of the show. And we'll be talking about all the stocks that are expected to make headlines this morning. But before we move ahead with all that, let's take a look at what the global handover is looking like this Monday morning. Well, mixed cues coming in from Wall Street on Friday as well as for the last week as high inflation and fears of further rate hikes weigh on sentiment. Investors will now closely watch out for the Fed minutes that are due on Wednesday. Asian markets fall in early trade, but the SGX Nifty is indicating a positive start for the Indian markets. And on the show today, we'll talk about the latest reshuffle by FTSE Russel Index and what kind of inflows it would translate into for the stocks. Also in focus will be Sun Pharma, Cipla and Samvardhana Motherson. Well, we're now joined by Rajesh Palviya of Axis Securities. Well, good morning, Rajesh. Good to have you on the show. SGX giving out mildly positive cues, 40 points up or thereabouts. And, on Friday's session, we gave up that 18,000 mark. And in fact, both the DIIs and FIs were sellers on Friday. Given the fact that, the US markets are shut today on account of President's Day, there won't be much cues coming in from Wall Street this night. But where do you expect the markets to head this morning? Do you expect the Nifty to once again make a dash at that 18,000 mark?
Good morning, Anita. So, if we analyze the overall setup for the market, still stuck in the range. We tried to cross 18,000 level in the previous week, but again, supply pressure is still there around those levels because if we analyze the derivative data setup, a lot of call writers are there at 18,000, 18,100, even 18,200. All strikes are having major call concentration, and the pullback which we have witnessed in the previous week, the call writers were aggressive around those strikes. So until Nifty not manages to cross above 18,100, it's going to remain in the tight range only. On the lower side, 17,850, 17,800 are the key support area for this week. If it breaks those levels, then possibly again Nifty may face furthermore, supply pressure, and it may go down towards 17,700 also. But looking at the near-term setup, yes, for this week we are expecting that Nifty to remain in range of 17,800 to 18,100. This could be the possible range where we can have mixed behavior in the market because still leadership is missing in terms of giving the breakout on the higher side or on the lower side. So most of the stocks or most of the large cap stocks are still in a range only. Nothing major in terms of price action from the large cap space also. Though some supply pressure is still there in the system, so comfort will come only above 18,100 on the buying side. And bearish trend may emerge below 17,700. If we analyze the Bank Nifty is not contributing anything to the Nifty, and we have witnessed that Bank Nifty broke its important support area of 41,500 on the closing basis. So there is a negativity in the Bank Nifty. If Bank Nifty continues to trade below 41,500, then possibly we can see furthermore, bearishness in the banking stocks as well as in the financial stocks in the coming week, in the current week, and possibly Bank Nifty can go down towards 40,800 to 40,650, which is the next immediate support area on the downside. We have witnessed that, most of the banking stocks were trying to give some recovery, but still struggling to cross their important resistance area in the pullback in the previous week. And there is nothing as such on the private as well as on the PSU Bank in terms of positivity. So we believe that, Bank Nifty could be a party spoiler at the current juncture, and maybe Bank Nifty can create some pressure in the market because as Bank Nifty is having almost 28 to 30% weight on the Nifty also, right. So banking stocks. So that is the important sector which one needs to keep eye on this expiry week, because again it's going to be FAB series expiry, and most of the time we are struggling to cross this 18,000 mark for this FAIR series. So it's going to be very interesting to see whether we able to give a breakout above 18,000 level on the decisive basis or not, because this is the very important level on the closing basis for to monitor.
Sure. So Bank Nifty could play spoil sport this expiry week. But the pharma pack is also in news this morning. We've had Cipla that has received 8 observations for its Pithampur unit from US FDA. On the other hand, we have Sun Pharma, which will buy somewhere around 26% stake in Augusta Software for 30 crore rupees. Augusta is an early stage digital diagnostic devices company. In light of this news flow, how do you expect Sun Pharma and Cipla to behave in today's session?
So before discussing to both of these pharma stocks, I'll just share the view on the Nifty Pharma Index. Nifty Pharma Index is continuously making lower top, lower bottom formation on the daily as well as on the weekly chart. The Nifty Pharma is in continuous in the downtrend. Nifty Pharma is trading below to all its the short-term, long-term moving averages, so which is adding up the bearishness in the pharma space. There is no as such significant recovery we have witnessed in any of the pharma, large cap pharma, as well as in the mid cap pharma space. Whole sector is struggling to give any kind of substantial pullback action. So still, we believe that the pharma space is likely to remain under pressure only. If you analyze the Cipla, since last 7-8 days, stock is struggling to cross its 200-day moving average. Though structure is weak, stock is trading below to its 50-day, 100-day moving average, and now it's trying to recover above 200-day moving average. But looking at the price behavior, until the Cipla not able to cross above 1,060, 1,070 mark, it will remain under pressure. And on the other hand, if it breaks below 1,000 level, then possibly Cipla can go down further towards the 960, 950 zone, which is the next support area on the downside. If you analyze the Sun Pharma, in the recent past, the stock is in corrective move, and stock has given a breakdown to its important support area of 1,000 level on the daily chart, which is the upsloping trend line support area. The stock is now slipped below to its 20-day, 50-day moving average, which is also adding up some bearishness at the current juncture. Looking at the price behavior, if stocks manages to cross above 1,030, 1,040 level, then only we can see some kind of recovery in this stock. Though overall long-term setup for Sun Pharma is bullish, is still bullish, but on the near-term setup, 1,020, 1,040 are the key hurdle. Until these levels are not crossed, we'll see some supply pressure is going to remain in the system. And on the other hand, if it breaks below 970 level, then possibly it may show further more weakness towards 960 to 940 on the downside.
Right, Rajesh, hold that thought. We'll come back and speak about all the other stocks that are in news this morning. But before that, let me also introduce on the show Gaurang Shah of Geojit Financial Services. To talk about the semi-annual index reviews announced by FTSE as well as NSE over the weekend. Good morning, Gaurang. Good to have you on the show. Well, Kotak, IDBI Bank, ACC, Patanjali, all of these counters have been added to the FTSE large cap index. While Kotak was expected to make an entry, a surprise element was IDBI Bank and even Patanjali for that matter. How much of an inflow would you expect these inclusions to translate into for these stocks?
Thank you, Ranta, and morning to all of you. Also, I think adjustment and rebalancing will happen. There are likely going to be inflows in this name because that the news is going to be on the positive tailwind side. I guess, both especially Patanjali, if you go to see, on the liquidity front, I think there is very low liquidity. I'm talking about the total volumes on the exchanges. So possibly there will be a highlighted activity as far as this name is concerned. For IDBI, I think it is going to be a little bit cautious kind of approach, though there will be a positive upside because on the news flow. But I think, and of course, these are just changes on fallback of news flow. In terms of fundamentals, nothing changes. Short to medium term, there might be uptick. So I think what I would say is that for long-term investors, don't rush into these stocks because of these changes. be patient a little bit and then possibly take a call. Volume wise, I think Patanjali, because of low volumes, could be in action at least for a couple of more days.
Right, so don't rush into these stocks, is the advice from Gaurang. Gaurang, let's also talk about the Adani group of stocks. There's been no action, at least where FTSE index is concerned, but NSE has added two Adani stocks, that is Adani Wilmar as well as Adani Power, to its Nifty Next 50 index and Nifty Next 500 index. But MSCI will be proceeding with the weight changes they announced in the May review. In light of all the news flow that's surrounding these Adani group of stocks, I mean, most of the analysts have said, like, to adopt a wait and watch approach. How would you view this Nifty inclusion, the Nifty indices inclusion for these two stocks going forward for this group of companies?
So, first of all, a blanket disclosure, we don't have coverage on any of the Adani group of stocks from a pretty long period of time. And what I would say over here, Nandita, is that you should use your wisdom and fine sense of judgment when things like this happen. News flow is an overhang for I think more than a fortnight. I think it's almost about 3 to 4 weeks that these news has been creating trouble for the group of companies as far as Adani is concerned. As far as inclusion or exclusion, like I mentioned, fundamentally nothing changes. Companies, remains to do work as it was doing earlier and possibly improve over there. The impact of these inclusion and exclusion, Nandita, is only from a short-term period because of the fact of the news flow. Those stocks which are going out, they may witness outflows. Those stocks which are coming in afresh, they may witness inflows because of the rebalancing that the respective entity has to do. So fundamentally, nothing changes as far as my understanding concerns. As far as your question is concerned, whether to invest in Adani group of companies or not, well, since we don't have a coverage, I can't comment on buy, sell and hold. But I would only say this, that please use your wisdom and fine sense of judgment.
Right. Gaurang, Paytm, let's talk about this counter. It's out of Nifty Next 50 index as well as Nifty 100. But if you look at the performance in the quarter gone by, it turned EBITDA positive. We've had a slew of brokerages come out and say that, hand out target upgrades. In fact, Macquarie has, in fact, double upgraded the stock. I wanted your thoughts on this company going forward, given the fact that, they have turned EBITDA positive 3 quarters in advance.
Well, thank God for that, because if you look at the time of the IPO, the valuation, the listing, and then the disaster downside. I'm not only talking about Paytm, Nandita. I'm talking about the other companies as well, which are supposedly unicorns, new age technology companies. About a month back, if I may recollect right, we initiated a coverage on Paytm when it touched, I think, close to 500 or 525 or thereabouts. And the levels where the stock is trading right now, close to about 625, 630, the targets that we had placed that time have already been achieved. In fact, we want to set as overshoot our targets. So I would say that don't do fresh buying at current levels. If you really want to buy it on dips, that would be a better strategy. And these recommendation on Paytm is purely for those investors, Nandita, who have extremely elevated risk appetite. Otherwise, you have, traditional sectors and stocks to look at. You may see volatility in terms of overhead supply, even on Paytm, given the kind of run-up that it had seen over the last month and a half or so.
Well, that's the call on Paytm then. Maybe a buy on dip strategy would be prudent for investors. Well, on that note, thanks a lot for taking out time and joining us this morning, Gaurang. It was lovely having a chat with you. Going back to Rajesh, lots of queries coming in this morning. Let's take up the first one. It's coming in from DK and he has a query on HDFC Life Insurance. This stock has been slipping quite a bit after the budget. In fact, it's down somewhere around 20% since the budget. Would you suggest holding on to this counter, or would you expect some uptrend to come into these counters going forward?
So almost it's a 1.5 year that stock is underperforming and continuously in a downtrend. In the correction which we have seen post-budget, now stock has given breakdown to its important support area of 525, 530 zone, which was the major important support area on the monthly chart. So till stocks continues to trade below 525, 530 zone, then possibly stock may remain under pressure only. If it crosses above 530 level, then some support buying we can see in the stock and some pullback action we can expect towards 565, 570 zone. But overall structure is still weak until stock not crosses above 600 level on a weekly or monthly closing basis, which is the major supply zone for the stock for any kind of pullback action if we see in the coming month or coming weeks. So 600 is the key hurdle on the higher side. And as I mentioned that, 530 is the immediate resistance area. If it continues to trade below 530 level, then possibly the pressure is going to remain for the stock. And maybe if any weakness comes in the market going forward, then possibly this stock can take a hit and possibly it can go down towards 470, 465 also. That is the major support area in this decline.
Right, so those are the levels to watch out for on HDFC Live. The next query is coming in from Harry Singh and he wants to know your thoughts on Gabriel India. In fact, this stock was fairly buoyant on Friday, but over the last 1 month, it has shaved off somewhere around 11% or so. He wants to know your entry and exit strategy on this stock. Rajesh, what would you advise him?
So since last couple of months, we have seen that stock is in corrective move. It's almost third consecutive month where stock is forming lower low formation. Though overall long-term structure for the stock is in bullish zone, this corrective move has taken the support from its important support area of 200-day moving average, which is also coincide with its multiple support area of 150 zone. So now if it's since last 3 days, we are seeing that some pullback action is coming in this stock from the lower level. So 150 is the key level as of now. If you want to take a bet for trading point of view for very short period of time, then 150 should be your stop loss to play this pullback action. Possibly in this pullback action, stock can move further higher towards 170-75 zone, which is the immediate resistance area, which is also coincide with 100-day moving average. So if you bought at lower level or if you want to buy for trading point of view, 150 should be your stop loss, 175 is the target where you can book profits. And if you want to buy for some longer period of time, then your major support area for this stock is at around 135, which is the good entry level in the decline. And on the higher side, 200 is the resistance area. If stock crosses those levels, then possibly stock may continue its upward trend. And then for long term, it may move further higher towards 240, 250 also. So that's all level you need to watch according to your trading style.
Well, the long-term setup looks good on this one. The next stock that I want to talk about is Samvardhana Motherson. It's in news this morning. It has acquired a German company for 4,700 crore rupees. Now, there is a query coming in from Bikram Murmu. He wants to know how this stock is looking on the charts for a fresh entry. What would you say, Rajesh?
So Motherson is consolidating since last 4-5 trading session in very narrow range. 75 to 82 is the immediate consolidation range. Looking at the near term to short term setup, yes, some recovery is taken place in the stock prices. And looking at the recovery in recent move, stock is now trading above all its 50-day, 100-day, 200-day moving average, which is also adding up some sort of bullishness in the stock prices. So 75 is your stop loss to buy at the current juncture. Once the stock crosses above 82 level, then possibly this stock can really further higher towards 90-95 level in the short term also. So you can buy with stop loss of 75.
Right. So those are the levels to watch out for on Samvardhana Motherson. The next query is coming in from Pavandeep Singh and he wants to know your thoughts on Tata Power. The stock didn't really do much last week. It was down about 0.5% or thereabouts. Would this warrant a fresh entry at this juncture, Rajesh?
So since last 8 to 9 months, stock is in consolidation range. Though stock has displayed a strong rally in year 2021, but post that almost it's a 1 year consolidation we are witnessing on the monthly, weekly time frame. On the monthly time frame, stock is forming a flat kind of formation, but breakout is still awaited. So looking at the long-term setup, yes, stock is in bullish trend, but it's in consolidation mode. So if you want to buy for a long-term basis, you can buy and accumulate this stock. Keep your stop loss of 185. On the breakout of 230, 35, possibly if it happens in coming month, then stock can rally towards 285 to 300 zone also. So overall, after a strong rally in 2021, now stock is in consolidation mode. And looking at the monthly setup, weekly setup, we believe that, sooner or later there could be an upside breakout about 225 to 30 zone, and then possibly stock can give good rally towards 280 to 300. So our recommendation is to buy and hold. Keep stop loss of 185. It's a slow mover stock, so you have to invest and buy in a staggered manner, and you have to hold it for some more period of time also.
Right, buy and hold is the strategy that Rajesh is recommending on Tata Power. The next query is coming in from Neeraj Garg, and he wants to know your thoughts on Vindhyat Fashion. Now, the stock was up somewhere around 1% or so on Friday, and over the last 1 month, it has gained just about 1.5%. What would you advise investors to do with a stock like Vindhyat Fashion at this juncture?
Yeah, so there was a buying action in the previous trading session. If we analyze the overall structure of Manyavar, or you can say Vindhyat Fashion, since last 8-10 trading session, stock is now hovering above its 200 moving average and trying to hold those support area. So looking at the price action in the near term, we believe that if stocks continues to hold about 1200 level, then possibly this pullback can continue towards 1300 to 1320, which is the next resistance area for the stock. Though we don't have much data setup because it's recently listed in early 2022. So again, looking at the limited data setup, we believe that 1200 is the immediate support area. If we continues to hold above this level, then 1300 to 1340 could be the possible target in this pullback.
Right. The last query for today is coming in from Funny PG, and he wants to know your thoughts on Patron LNG. What kind of a stop loss should he be keeping on this counter?
So if you've already bought at lower level, your stop loss should be around 214, which is the immediate support area for the stock. Though stock is struggling to cross its 225 to 30 zone, which is the major hurdle for the stock on the higher side. Until the stock not crosses about 230 zone, it's going to remain in range. 214 to 230 is the range which we are expecting for this stock. So your stop loss is 214. In the pullback, you can book some profits towards 225 to 230 zone.
Right, hope that answers your query, Funny. Well, with that, it's a wrap on this query segment. But before I let you go, Rajesh, leave us with some stock recommendations for today.
So in the last week, we have seen significant buying action in the cement space. So first stock is from the cement space, that is Ultratech Cement. Very strong buying action, and stock managed to give breakout on the daily chart of its downsloping trend line. So looking at the breakout, we believe that Ultratech Cement can scale up further higher in the current week. Also 7350 to 7400 could be the possible target in the near term basis for trading point of view. Stop loss should be 70 to 20. The second stock is Asian Paint. Though stock was in corrective move, but since last couple of trading session, we are seeing that good buying interest or short covering action is taking place in the Asian Paint. Looking at the near term setup, we believe that Asian Paint can continue its pullback towards 2900 to 2920. One can buy with stop loss of 2760. Third stock is from IT space, that is Tech Mahindra. Very strong buying action we have witnessed since last 3 trading sessions. And in this up move, stock managed to view breakout above all its important moving averages. Looking at the setup, we believe that Tech Mahindra can show some bullishness in the coming trading session. One can buy with stop loss of 1080. Upside target is 1200 to 1220.
Right, Ultratech, Tech Mahindra and as well as Asian Paints are three counters that are being recommended by Rajesh for this morning. Well, with that, Rajesh, thanks a lot for taking out time and joining us this morning. It was a pleasure chatting with you. Well, with that, it's a wrap on this edition of Morning Trade, but don't go anywhere because coming up next is Opening Bell.